Dear students and working accountants, welcome to my Export Tally Prime YouTube channel. My name is Babura from Hyderabad. In this video, we are going to discuss about the Tally Prime 5.0, that is release 5.0. In this release, how to process the payroll management. That is payroll management, or it is also how to process the or calculate the salary part 3. So already we completed 2 parts. This is the third part. And before entering into the topic, a request to you, many people, they are visiting the channel, they are watching the videos and going without subscribing to the channel. So I request you all, everyone who are visiting my channel for the first time, please subscribe to my channel and click the bell icon next to the subscribe button and select all. So if you select all, you will get notification for all the videos which I upload in my channel. Okay. And also share my channel with others also. And one another very important thing is, everyone, please watch every video till the end. Don't skip in the middle. If you skip the video, you can know or you can learn the subject or topic up to that point only. The balanced topic or subject matter you cannot understand. It will be like off knowledge. Okay. See, in the college, we attend the college and we'll sit in the college the class for at least 2 to 3 hours. No, that is only an academic qualification. And here we are learning, a professional software Tally Prime. So for learning that professional software, you have to spend some time. So at least 40 to 50 minutes or less than 1 hour you have to spend, and you have to watch the video till the end. Then only you will get full knowledge. Okay. And then after watching till the end, if the video is good, please like the video so that the YouTube people will recommend this video to many people, so that many people will learn this topic. And now we are entering into the subject. Now I will share the screen. See here, already we completed 2 parts relating to the payroll management. So first of all, in the first part, we completed 5 steps. So I'm creating the employee category. It is optional. So I will teach something about, I will tell about this after some time again. Okay. And then employee group under the uh, category means it is branch or office. And under that, each category, that is each branch or head office. So there will be some departments. So departments are called as groups. So groups of employees. So employee groups category under this. And in each department or group, there will be some employees who have to create their names and have to give all the details of their names, all the details relating to these persons, the employees. So, and then creating the units of work for many different units will create. Generally, we require now days and everything will be automatically by default, it will be created. We can create in some different things. For overtime work, we will recreate the hours, minutes, and this is simple unit and compound unit. Hour of 60 minutes we will create. And then attendance and production type. So what is the attendance and production type that we created already learned? Generally, we require mostly present and overtime. And if you require some other things also, you can create. That is attendance or production type. Then create payheads. In these payheads, one is payment payheads, means earnings to the employees. Earning payheads is one payheads. There are 3 types of payheads. One is earning payheads, amounts paid to the payable by the employer to the employees. And then deduction payheads. In these deduction payheads, there are 2 deduction payheads. There are 2 types. One is general deductions and statutory deduction. So we have completed general deduction. See in the problem. See, deduction payheads, canteen pay deduction, salary advance, if any loan. So all these will be deducted by the employer, and you will take them. You will take the money. That is why they are called as general deductions. So up to that we completed in the last video. In this video, we are going to learn some more deductions, they are relating to the statutory, they are relating to the statute. Statutes means acts. So there are some labor acts under which every employee after when the employee joins the duty, when he joins the employment, the employer has to register their names, register their details under different acts like Provident Fund Act. So they have to, with the Provident Fund organization, the employee is to be registered, and with the employees state insurance corporation under the ESI Act used to be deducted, used to be registered, and under the national pension scheme, so NPS, under that he has to register like this. And as per those laws, those acts, or those statutes, we have to make some deduction from the salary of the employee. So these deductions are called statutory deductions. Okay, so payment heads, that is earning heads. Then in deductions, general deductions and statutory deduction. Relating to the statutory deductions, the employer also has to contribute towards these deductions. He will contribute something under the act. So they are called as employer contribution pay heads. So in the deduction pay heads, deducted from the salary, and for the deductions, he will add something. That is, he will contribute some amount for that, and total amount, deducted amount, and this contribution, total he will pay to the government, means the concerned department. ESI corporation, that is ESI, the ESI corporation, that similarly Provident Fund organization, all these funds, national pension scheme, general government, he will pay to the government like this, to the departments. This is what we are going to learn. Statute, this is general deductions we completed in the last video. Now statutory deductions and employers contribution, this one. So in this, we go to the tally. So go to alter, because I already created the letter. I told you in the lesson, payment heads, that is earning heads, and then I created, and general deductions also I created, and this statute deductions also I created. That's why you have to go to alter. If you want to create, you can go to create, and you can create in the required masters, or go to alter. This here also, go to the required masters, and then check up if anything is required. We can, there itself we can create. Otherwise, if you already created, okay. So pay heads will go. In the pay heads, I already here we completed the payment pay heads called earning pay heads. We completed, that is basic salary, bonus, then conveyance allowance or conveyance or traveling expenses, dearness allowance, gratuity is only a provision, house rent allowance, then medical reimbursement, overtime, then variable pay. This is also called as incentive also. It is called as incentive also. So all these we created. And then in the deductions which are made and retained by the employer, they are called as general deductions. For that, we created something like canteen deduction. We already did it. Canteen deduction. If any loan is there given to the employee, like housing loan or marriage loan, like that, how to deduct that one. And then after that, salary advance, if any advance is given to the employees, like festival advance, like that. So from that advance, we'll deduct something. This we completed. Now we will go to the statutory deductions. So directly see here, if you want to create that, go to the another this tally. So if you go to pay heads, and here you can create, here you can create the deduction pay heads, all the deduction pay heads, all the pay heads, whether earning pay heads, general deductions, statutory deductions, and also employer contribution, everything, all these come under the pay heads. We can create here. I already created. How we will create? The same thing we will do here. First of all, in the deductions, statutory deduction, the first one is provident fund deduction from employee. So provident fund deduction we have to make. So we will go here. So here, provident fund deduction at the rate of 12% under the act. So 12% is to be deducted from the employee salary. Salary means not the total salary. We'll take up only some pay heads. some pay heads we will take, and on their pay heads we calculate. So it is named as employee PF deduction or PF contribution. Employee contribution, employer contribution, like that we can say. Or PF deduction is deducted from salary contributed by the employer. Okay. The employee PF deduction, yet the rate is 12%. Okay. And the 12% and come down here, the information that is pay head information for earnings we gave as earnings for employees and bonus and gratuity gave separate heads. So earnings for employees. But now it is deduction. Deducting the money and retained by the employer called general deduction. It is taken as deduction from employees, deducted and kept with the employer. You will take it. That is why they are called as deduction from employee. But now we are deducting as per the law. They are called as employees statutory deductions as per the statute, means law, act. As per the law, we are deducting. That is why it is taken as employees statutory deduction. And now it is provident fund. It is to be deposited in the provident fund account number 1. That is, the amount is deposited by the employer in this account. That is the statutory type. Okay, then come down. So here, this is deducted from the employee, and here is given duties and tax. Some people yesterday I saw one thing. It's taken as duties and tax. It is not a duty, it's not a tax. Just like savings, paying money, and at the end of retirement, you will get the money. Okay, that is why it is not say duties and taxes. It is for the employer. We are employer now. The employer is deducting and paying to the government. So it is taken as current liabilities. It is current liability. It is not a duty or it is not a tax. It is a savings type. So you'll take up deducted and paying to the government means it is a current liability. So take it as current liability, and here affects the net salary. So salary will change. If you deduct, salary will change. Yes, then the name is shown, and here automatically by default it is taken. It is to be computed 12%. How to compute? That is called computed value every month, and normal rounding 1 we will take, and you come here. You have to calculate percentage. So take some heads and percentage. Take specified formula. Here PF will be calculated on basic pay. Basic pay means dearness allowance also. If there is no dearness, nowadays private sector they removed the dearness allowance, but the government, state or central government will pay DA also. But here, if there is DA, take basic and DA. There is no DA, only basic. So we have to. So here basic salary, add. We have to add another pay list. Add pay head. So second one dearness allowance. That's all. End of list. And see, specified formula basic salary plus dearness allowance. From 1st April we are starting. We can calculate the salary for any month depending on their attendance. Starting from April 24. And here, this employees provident fund deduction and employer contribution is also limited to 15,000 of the salary. Salary in sense here, basic salary and dearness allowance on the total. This percentage deduction and contribution of the employer by the employer is limited to 12% only. So amount up to 15,000, it is calculated in percentage. It is 12%. Percentage 12%. And above 15,000, so the above 15,000, the amount is not eligible for the PF deduction. That is why above 15,000, we will not deduct any amount. Only up to 15,000 deduct. Even though the salary is more than 15,000, then up to 15,000, what is the amount? Up to 15,000, it is 12%. It works out to 1,800 rupees. So if the salary is more than, this salary means these two is more than 15,000, then we will not calculate percentage. Just you will take it as 1,800 rupees lump sum amount. That's why it is called as value. Value means amount. Percentage means calculation. So 1,800 rupees. If the salary is suppose 12,500, so we will calculate 12% up to 15,000. That amount will be 1,500. If it is 15,000 also 12%, the amount will be 1,800. If it is 18,000, for example, the amount is 12% is 2,160, but that will not be calculated. The maximum cap limit is 1,800 only, up to 12,000, 12% on 15,000. So only 1,800 rupees we will put it here. That's all. So no percentage value, that is the value, that is the lump sum amount above 15,000. If the salary is more than 15,000, we should not calculate 12%. Only lump sum amount will be taken. This is the first one. So provident fund. And then ESI, employees state insurance, it is meant for small employees, employees with less salary. So the ESI corporation, this government, ESI corporation will provide medical facilities, medical treatment and medical facilities to the employees. By For that purpose, a small percentage is deducted from their salary. Okay, so that is called as ESI deduction. So it'll come down here. Employees ESI deduction. That is employees contribution, you can say. Deduction that can be said as employee contribution. Why it is a previously it was 1.75%. On which amount you will calculate, you'll calculate. 1.75% from 2019, it is changed, so reduced to only 0.75% from the employee. From the employee salary, it is only 0.75. So here also, it is deduction, statutory deduction. And here separate head is given. Here, Provident Fund account, it is deposited in here. Employee state insurance, separately given head. It is also current liability, deducted and payable to government. And then salary will change. That is, net salary will change. This is the name. This is also to be calculated. So as compound computed value and normal rounding will take up. Here you will take up the specified formula. Here is all the regular incomes of the employee, regular payments will be taken. So basic salary, then add pay head, then dearness allowance will select, then again add pay head, then you will take up house rent allowance, then again you will take up conveyance, then again you will take up overtime also. And after that, if you take add one, another one is their variable pay. This variable is not a regular income because the employer may pay or may not pay. So that is why this variable pay that is will not be taken, or some people they will take this also. So we will not take it. Okay. And so here end of the list. So here is all shown. Basic salary, dearness allowance, house renting allowance, conveyance and overtime. And here there is no limit of the amount. There is a limit, I'll tell you. There is a limit, but the limit is 21,000 rupees. That is all these amounts together. If the salary, that is the salary means these amounts only, is 21,000, more than 21,000, then this employee is not eligible to get medical facilities from the ESI. That is why ESI Act is not applicable to those employees above 21,000 rupees, up to 21,000 rupees only. That is the limit. Up to the 21,000 only, this will be calculated, and it will automatically built in. It is automatically, it will calculate if the salary is less than 21,000. If it crosses 21,000, it will not calculate. So percentage is 0.75%. Okay. And then accept. That's the one thing I forgot to tell you. So first of all, this Provident Fund. In this Provident Fund, one thing I have to tell, the restriction. So for every employer under whom the employees are 20 or more, 20 or more. If 20 or more, this is compulsory. They have to register the employee with the Provident Fund organization, and they have to deduct the PF amount. They have to deduct the amount. That is, the employees are 20 or more. That is 20 or more. If the employees are less than 20, so there is no necessity to register the names with the corporation, the Provident Fund organization, and deducting the amount. So they need not deduct Provident Fund. They need to contribute also Provident Fund if there are employees are less than 20. But still, if the employer and employee mutually agree, they can deduct. They can deduct the salary in Provident Fund. They can deduct from the employee, and employer can contribute. But in that case, the deduction may be not necessary, but 12%. If it is 10%, is enough. So less than 10, there are 20 employees, the percentage of deduction will be 10% only. It is voluntary, not compulsory. If it is 20 or more, it is compulsory. Sorry. Similarly here, ESI. So the salary is, salary means all these amounts is more than 21,000. So this is not applicable. There will be no ESI deduction. The employer also will not contribute anything. So for lesser small employees only, this is meant. So if the salary is less than 21,000, this is deducted. That is already built in. It will be taken. Okay, this is completed. This is the second one. And the third one, another one is there is one scheme called NPS, means National Pension Scheme by the central government. National Pension Scheme by the central government organization. So for that, we can have contribution. So in such case, the contribution it is 10%. Employer also has to contribute. Generally, this is not compulsory. It is only optional. That is why the many employers they have to contribute the amount 10% both. Employee deduction is 10%, and employer contribution also 10%. Not employer here. I have taken employer here. NPS, employee deduction. So 10%. So the employers will be generally, they will not be happy. They will not accept to contribute 10% of the salary. Okay, 10% they will not contribute. That's why if they don't like to contribute, so they will not contribute, they will not deduct from the employee also. If deducted from the employee, definitely they have to contribute. That is why it is only optional. That's why the employer will not contribute. The amount will not be deducted from the employee. If they are both agree, then it will be deducted. The rate is 10%, and here it is kind of tier 1. So in the system, there are two tiers, tier 1, tier 2. In tier 1, whenever you want, you can withdraw partly or fully, we can withdraw. There are no restrictions. Tier 2 means there are restrictions up to certain time, lock period. That is called locking period. Up to that time, they cannot withdraw. After that, although they cannot withdraw fully, with some restrictions, they can withdraw part of the amount only. That is why mostly part tier 1 only, they will contribute. So this is called as employees NPS. NPS tier 1 deduction 10%. So this is also statutory deduction for this employee. This is NPS. NPS, that is National Pension Scheme tier 1. So this you have to collect, and it is also liability you have to pay. So it is deducted means salary will change. And here name, this is the name shown, and here this is to be computed. It is optional na. That's why it's not actually, it's not taken by default. You have to select it, user defined, or it's not user defined. It is compulsory. You have to compute 10%. Computed monthly, normal rounding. Here you will come to specified form. This NPS is also calculated on basic only. Basic means basic plus, always basic means basic plus DA. If there is no DA, only basic. Otherwise, both. So basic salary, then add paid dearness allowance. So here we will take up end of this one. There is no amount limit here. There is no amount limit. Percentage is 10%. So this is accepted. So these are the thing. And in addition to this, there is one thing like called as professional tax. This professional tax is deducted and paid. This is only the employee is liable for this. That is only amount is deducted from the employee and paid to government, but the employer will not contribute anything. This is for the profession of the job. When his employee person is employee, when he is doing job, he has to pay the professional tax. Any business, if you are doing a business, the employer also doing business, the employer also has to pay the professional tax yearly once, but the employee will pay every month depending on the income, salary. But the employer will pay not depending on the salary or income. So per annum, per year, he will pay a certain amount, and the proprietor also has to pay. And if it is a company, the directors, MD, all the directors, MD, everything, everybody, they have to pay every year. But employee will pay every month. That is deducted by the employer and paid to the government. That is why here only employee deduction. So professional tax simply we can say, or professional tax deduction we can say, whatever it may be. Simply you can take as professional tax. Okay. And this is also statutory deduction only, and it is the separate head is given. This is Provident Fund, ESI, NPS. This is professional tax. And for the professional tax, the registration will be there for the registration number given. And it is also current liability. Many people are taking duties and taxes. It is wrong. It is not a duty or tax. This is a tax. The name is tax, but this for the employer, it is current liability. For the person, employee, it is a tax. But for the employer, this is employer now. We are entering in the employer books. The employer, it is a liability, deducting and paying to government. Current liability, TALLY will change, name personal tax, and as computed. So it is by default, it is taking monthly, because in the case of business, the employer, directors, and all the, it is paid annually. That is why here it is computed, and here it is period. It will get period means, some period means it is yearly, like that. So monthly you will take up, normal rounding. Here how you will take up? Here, in this case of professional tax, all the income, it is there, permanent income, regular income or not, total, all the income, total income, he has to pay the tax. Depending on the total income, there are slabs. On the total income is every income. That is why here we did not go. It is a computed value. How it is not specified value. That is not calculating percentage on some pay heads. Here, all the pay heads total we are taking. That is why it is called as on current earnings total. That we will take up. That is the year. And here there are 3 slabs. Previously there were 4 slabs. In most of the states, particularly 2 states, Telugu states, this is the slab rate. Okay. And in many other states also they are following this. First 15,000. First up to 15,000. Here no percentage is calculated. Simply one lump sum amount. That's why value up to 15,000 value, it is 0, no professional tax. And greater than 15,000 means from 15,000, above 15,000 to 20,000, the amount will be, this value amount will be 150 rupees. 20,000 above, that is above 20,000, greater than 20,000, irrespective of the total amount. The above 20, so whatever the amount it is, 30, 40, 50, and whatever amount, the maximum amount will be 200 rupees. 200 rupees. Okay. And there are 3. Previously there were 4. That is, these 2 were there, and these 15, there were 2 slabs merged together. Actually, up to 10, 0, 10, about 10 to 15, about 10 to 15, there was 100 rupees. So 2 slabs combined together and made 0. So these are the only amounts will be calculated. Okay, this is the, so these are the what you call as deductions, statutory deductions. They are called as statutory deductions. See here, statutory deduction, NPS, and income tax also. Income tax you will take up later. At the end you can take, or you can now you can take. Okay, now also you can take, no problem. So we will take income tax. Here income tax. This is also employee statutory deduction. We have to deduct and pay to the government. Employee statutory deduction. For this also separate head is there. Everyone separate head. So income tax, it is also current liabilities. Okay. It is duties and taxes means for the employee, but for the employer, deducting and paying to the government. So towards the tax. So current liabilities, salary will change. Yes, the head is income tax. We need not calculate anything. That income tax is automatically as per the total income. It will calculate. It will when you are giving income tax, projected value, actual, that is for the whole year. It will take the total income for the whole year, and any deduction, any exemptions, we have to declare that. And after that, what is the net salary? And on that, as per the income tax slab rates, it will be calculated and divided. The tax will be calculated, divided by 12 months. So every month that amount will be deducted. So that is called as per income tax slab rates, every month it is to be deducted. So here automatically from here income tax will be taken at 1, and also here only for income tax upward rounding, even 1 paisa is there, it is increased to next rupee. So that is why by default, if it is given rounding, we will take up normal rounding, but here we are taking upward rounding for income tax. Okay. So these are the deductions, statutory deductions from the employee. Now, employer also, against these deductions, employer also has to contribute some amount. So for that, first of all, you will take up. So the first deduction is provident fund deduction. Now, employer also has to contribute 12%, deducted 12% from the employee, and the employer also has to contribute 12%, but the employer part of 12%, employer part of 12% is not contributed towards the provident fund. So it is the same provident fund amount 12%. Same 12% will be contributed, but not the total 12% will be contributed to provident fund. It will be divided into two. Divided into two. So one is EPS, Employees Pension Scheme. NPS is National Pension Scheme. Okay, that is different. That is central government. This EPS, Pension Scheme, is under the EPF, Provident Fund Organization. So employees pension scheme. So employees scheme, this will give pension. ESI corporation will be, that is not ESI. Provident Fund Organization will pay pension every month. So for that pension 8.33% will be contributed by the employer. So total 12, he will contribute 12 only. Out of 12, 8.33% is contributed to EPS, Employees Pension Scheme, and the balance 3.67, that is contributed to the Provident Fund. So divided into two, one is EPS 8.33%, balance 3.67% is contributed to Provident Fund. So that we will take up. So here EPS you will take up employer. So employer EPS contribution 8.33%, and this is called as here employees deducted from employee salary as per law. So employees statutory deduction, here employer statutory contribution, that is deduction. This is contribution, that is taking and paying the government. He is paying from employer from his pocket. So this is called as employer statutory contribution. Okay, so I told you, so the 8.33% will be towards EPS. So EPS account is given here, EPS account number 10. And here, see, this contribution is paid from the employer. See, not deducted and paid to government. That is current liability. Here, employee is paying from his income, from his pocket. That is why it is just like other payment heads. This is also indirect expense. That other payment heads paid to government, paid to the employee. But here, not paid to employee, but paid to the government. That is employees provident fund to the provident fund organization. So indirect expenses, and here these contributions are paid to government. They are not paid to employees, not deducted from the employees, not paid to employees. That is why net salary will not change. Affect net salary, no. And here by default, it is to be taken as computed value. Normal rounding you will take up, and here normal rounding compute you have to. We have to make computation. So specified formula, and this is also related to provident fund. So for provident fund, we calculate only on basic. Basic means basic salary plus add dearness allowance. These two we will take up, and this is provident fund related to provident fund. So it is limited to 15,000. Up to 15,000 rupees, it is 8.33%. So 15,000 rupees into 8.33% means the amount will be, if you round off this 1.5, 1,250. Okay. So this is calculated at 8.33% up to 15,000. Above 15,000, no, is not eligible for this one. So no amount is calculated. We will take up amount value 1,250. That is 8.33% on 15,000. That is the limit cap. So like this. And the second one, you must be very careful. And so 8.33% to EPS. Okay. Balance 3.67 is contributed to provident fund. So employers PF contribution 3.67%. So this is also a statutory contribution, and this is EPS is paid to a EPS account, and this is paid to provident fund account number 1. Provident fund account number 1. This is also paid from his pocket. Expenses indirect, and no salary is not affected. This is also computed. Normal rounding. We will come here, and here how to calculate. See here, we have to calculate up to 15,000 rupees. So for example, we have to what to do? We have to take 15,000 rupees. We have to calculate 3.67%. We have to calculate 15,000 into 3.67%. It will be 550.5. So we added 50 paisa there. We have to remove now here. So 550 it will be. Okay. we can do that. And above that will be, we calculate it 3.67%. Above 1,000, 15,000 means, I mean, this amount 550 rupees will be the amount. But just we will not calculate. As per law, it is given in the law, in the act, that calculation, both result will be the same. There may be some slight difference due to the rounding off. There will be some slight difference. Okay. And here, instead of calculating that one, so it is to be calculated in a different way, but the result will be the same. How it is? Already, total amount is contribution is 12%. So in the 12%, 8.33% is already contributed to the EPS. So the balance amount, that is, what is the amount of 8.33% calculated? So what it may be, if the salary is 15, if it is less than 50, 8.3% the amount to be calculated. So 12% is already deducted from him. From the 12% amount, you deduct the 8.33% amount, calculated amount. If you deduct that, balance amount will be 3.67%. We need not take all the Provident Fund, not to call the basic, DA, all these, they calculate 3.6. We need not do everything. From 12% of contribution by the employee, deducted from employee, deduct 8.33% contribution to NPS, EPS you calculate. If you deduct that, the balance amount is equal, the total amount balance amount, the balance amount will be the contribution to this one. So what to do is, yes, specified formula, we have to take employees provident fund deduction 2%. Take that. From that, we have to deduct employer contribution of employer EPS contribution of 8.3%. So we have to deduct. So here we are adding. Now we have to deduct, subtract pay head. Which pay head? Employer EPS contribution 8.33%. So that is to be deducted. That's all. So there is no limit up to 15,000, above 15, all these will not take up. Whatever it may be, it will come. That limit will be applicable in 12 when you are calculating 12%. So, and when you are calculating 8.33%, from 12% amount, calculated amount, if you deduct the 8.33% calculated amount, the difference is the total. The difference in amount will be 36.61%. So that 3.6, you must be very careful. So that after deduction, the balance will be the amount 3.67%. That amount, total amount, the deducted amount, the difference is the total is 3.67. So it is taken as 10%. That balance, the balance 10%. That balance amount is equal to 3.67%. So it is taken as 12% because 10%. Sometimes what we'll do here, so it is by seeing this, what we'll do 3.61%. If you take that from 12%, 8.33 is deducted, balance is 3.67 only. In that again, if you calculate 3.67, it will be wrong. That is why after deducting that, this is the method given in the act, we have to do this. And percentage will be 10%. That is 10% means of the balance. Okay. This is the thing. PF contribution. So it is contributed in two funds. One is EPS and otherwise Provident Fund. Second one is, next one is employee state insurance. So employer will also contribute employer state insurance. So here, employer has to contribute more amount, 0.75% deducted from employee, and employer has to contribute 3.25%. Total is 4%. So previously it was 6.5%, 1.75 deduction and 4.75 contribution. But here that is reduced from 2019. So 0.75% deducted from employee, and employer contribution is 3.25%. Come down. It is also statutory contribution for this. See, this is separate head is there already. In the case of employee also the same thing. Employee state insurance, it is also paid by the employer from his pocket. So indirect expenses, salary will not, all the contributions paid to government, not deducted from the employee, not paid to this one, these contributions. So salary will not change. This is also as computed value monthly, normal rounding. You come here, selected formula, that is specified formula. Here also the same thing, except non-recurring or not regular incomes. Other incomes will be taken. This one, basic salary, dearness allowance, then house rent allowance, then conveyance allowance, then overtime. variable pay will not take. If you take the variable pay, that is incentive also, when deducting the amount from the employee, there also if we take, here also we can take. Okay, this is over. And then the percentage will be 3.25%. Okay, rounding off. Okay, doing like this. This is over. So, and also these three, in addition to this, employer has to contribute 10% towards the NPS tier 1. If it is deducted from employee, then employer has to deduct. Not deducted from the employee, employer need not contribute because it is optional. So in this we have taken, that is why just we are giving that in the problem, in the organization when you are working, whatever is there, we have to take, otherwise you have to. So this one we have to take. Employer, that is employees deduction. This is employer NPS tier 1 contribution 10%. This is also statutory contribution. Statutory deduction from employee, employer contribution, statutory contribution for that national pension scheme tier 1 is there. And it is also indirect income. Salary will not change, will not affect the net salary, and that is the name. Here also computed value. You have to take months, normal rounding. Here will come. So here also it will take only two, basic and yearness allowance. If there is no DA, only basic. These two will take up, because here add pay head. There in the case of employer contribution to the provident fund, 12% of the employer deduction minus NPS contribution by the employee deduction. We have to take minus. That's why here we are adding. That is why add. There we are subtracting. That's why we have taken there subtract. Here add. Okay. And here come down. What is the percentage? It is fixed 10%. Okay. So all these are completed. These are all contributions by the employer. Contributions by the employer. Income tax we have taken already. That is also a deduction. And normal deductions are called the general deductions we completed. So statutory deductions we completed from the employee. Then from the employer, statutory contributions we completed. So then what we have to do is, so this everything is done. And then we have to define the salary. Means we have to pay, to create the pay structure. What are all the different amounts we have to give? If we give, these calculations will be done automatically. Some amounts we have to give them. We have to give the amounts paid to the employee. And if you give them, automatically these percentages will be automatically calculated. That is the total pay structure. What are the income paid to employee? That is, what is the earnings to employees? What are the general deductions? What are the statutory deductions? And what are the contributions by the employer? All will be taken, and that is the total. That is called as, define the salary. Define salary to the employees. What are the different amounts and what are the different types of deductions, and everything will be shown in the pay structure. So we have to define the salary, then we have to process the salary. For processing the salary means after this. So first of all, how you will pay? This is the all pay structure we decided. And how we will pay? We will pay as per his work. That is, how many days he worked and what is the overtime he worked. So depending on that, it will be paid. It will not be paid for the total month to everyone. So depending on the attendance and overtime, we will pay to the employees. So after defining the salary, what we have to do? We have to process the attendance. Then depending on the attendance and the pay structure, that salary will be calculated. Process the salary. So process attendance and then process the salary. So then net, after depending on the attendance, then net salary payable will be shown. That amount will be paid to the employee, and the statutory amounts payable. These statutory amounts also have to process. They will be paid to the concerned department, ESI corporation, Provident Fund organization. This professional tax will be paid to the local government like municipality or corporation. All this will be paid. Okay, on the different dates. That is different due dates. Okay, so that's what we had to do. That we will take up in the next video. Okay, so with you, if you cannot, there will be some confusion in some cases. You please go through once or twice, then you can understand very easily. It's very simple. Okay, with this I am closing this video, and we will meet in the next video. Bye. Good night.